So literally, there is a visible shortage here in Switzerland, and Switzerland is the home to many, many family offices, very many high net worth individuals. So whilst I can't comment on the situation in other countries like the United States, what I do see is that in a country full of wealthy people who bank here, they are basically coming here and helping themselves to what silver or gold they can lay their hands on.
Friday, February 6th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, Clive, it's been a while since we spoke on a Friday. How are you doing?
Well, hello, Mario, and hello, dear friends. It's a wet day here, just as it is in the UK, and we're doing well. We're looking at gold and silver prices higher than the 1st of January, but obviously everybody's very disappointed that it came off the highs by such a large percentage.
Yeah, and I was speaking to a friend who is in the markets, and what he's hearing, Clive, is that the big money, like the family offices, sovereign wealth funds, they want physical gold and silver. They don't want counterparty risk. And I'm also hearing that liquidity is really drying up. That private equity and private credit, a lot of investors are trying to get out, and they're not getting much for their dollar. They're getting like 30 to 40 cents. And I think what you told me about Switzerland and silver, it's kind of related. I don't think it's driven by retail. It's driven by the big money. So if we can start with the situation in Switzerland vis-a-vis silver, that would be interesting.
So one of the biggest silver dealers, gold and silver dealers in Switzerland is called Degussa. They are currently out of stock. They were a day or two ago. They've not been able to get any silver stock in for weeks, literally. Of course, silver is coming in the door from sellers, but the second it comes in the door, it's taken by the next person who comes in. It's completely sold out. As far as so they've got nothing at all in silver. As far as gold is concerned, they're almost sold out. All the small bars and all the coins have gone. So all they have left are the 250 gram bars, the 500 gram bars, and the 1 kilo bars. So literally, there is a visible shortage here in Switzerland, and Switzerland is the home to many, many family offices, very many high net worth individuals. So whilst I can't comment on the situation in other countries like the United States, what I do see is that in a country full of wealthy people who bank here, they are basically coming here and helping themselves to what silver or gold they can lay their hands on. I'm hearing I was speaking with a guy just the other day, a young man who from the UK who's been trying to load up their silver vault, and they've been going around the various coin dealers trying to lay their hands on it, and the stuff isn't available. Except that there's a little bit available, but this is more collector coins.
Yeah, I saw one of the big dealers here in the UK, not Gold Investments, who I am affiliated with. They always seem to have enough supply, but I think it's Atkinson's. You go on their website, and you can't get 1 ounce Silver Britannias. It's been out of stock for over a week, I think. And Clive, overnight, silver traded down to like 64,
Oh, I
and
didn't see
now,
that. Wow.
yeah, we're now at 74. And
Hmm.
of course, COMEX, they raised margins again last night on silver by 20%. That didn't help. And we're also hearing of this Chinese speculator who massively sold short on the Shanghai Futures Exchange. But the rumor is that he was trying to play the spread. He was trying to buy COMEX and sell China. He thought it was going to narrow, but I think all this volatility in silver, a lot of it is just speculative and paper. And I think what you said about what's happening in Switzerland and also what's happening in the UK is really more indicative of the real physical market. And I think, Clive, I've looked at the main U.S. dealers like SD Bullion or APMEX and others, to get 1 ounce of silver, like a 1 ounce silver eagle, it's around $90 or 87, 88. So yeah, that's what I think is going on. Silver is just highly speculative, unfortunately, and the futures market is kind of wagging the dog right now.
I mean, it's extremely volatile, but the reality here is if you try to get your hands on silver, at least where I am, it's very hard. And if the price is where you said it was, what did you say it was, just now 70 something?
Right now, we are at 73, well, or just below 74. So yeah,
Okay, so
so
I'm going
we're
to
up
try and,
about $3 from the close yesterday.
yeah, I mean, I know I won't be able to buy any physical silver at that level, and I would prefer to have physical, but I'm going to have a look after this show is finished to see how I can get my hands on some exposure to silver at that level, because I think that's going to be a good deal personally. And I'll tell you why in a minute.
Yeah, I mean, here in the UK, if you look at the spot price of silver, it's around 54 pounds 60. But if you
Hmm.
can get the silver, it's going to cost you like at least 70. And then you have to add the VAT. So this reminds me of 2008, Clive, when gold and silver dropped quite sharply there when Lehman collapsed. And I think it was the same in Switzerland. You can get gold for your clients, physical gold. And if you did get it, the premium was like at least 10%. Yeah,
So, in fact, when we had the Lehman crisis, there was no premium on gold, but there was a delay. So they could buy the gold, but they had to wait 2 weeks, 3 weeks to get the gold.
yeah,
Now, what I wanted to show you, Mario, is why I think there's a crisis in the silver market looming for March.
yeah. Do you need
For,
to allow me to for you to share?
yes, if I could
Let me
share the screen, that will give me.
allow. Okay, there you go. You can share it now.
Okay, yeah, I see now. Um, so just to give you a second. What we're looking at, and can you see it, Mario?
Yeah, yeah,
We're right up to date. This is what's called we're starting with the COMEX delivery notices month by month. And if I've converted it, these are contracts which are called for delivery on each month. But if you look at the graph below, the chart below, I've converted it to ounces, bearing in mind that every contract represents 5,000 ounces of silver.
yeah,
So we got the columns 2024 and 2025, and you can see that every single month in 25 is called for delivery, rate at 24. And overall, over the course of the year, just look at the bottom line here. If you look at the bottom line, it was more than, for the 2025, there was more than double called for delivery than 2024.
yeah,
Now let's focus on the months that we're in now. This is the delivery notices again, same as we saw above, but I'm just focusing here on January 24, 25, 26. In January 26,
yeah,
we went from 11 million, 11.8 million in 25 to 49.4 called for delivery,
yeah,
well up from 6.8 in 24. So we had a massive increase in deliveries in January. We're only 4 days into February, and we're seeing nearly as many contracts called for delivery as were called in February 2025. But what's interesting is I put a column here, open interest on 9th of January. So on the 9th of January, there were 19 million ounces of open interest for the February contract. Almost all of that, almost all of that has been called, all that 19 million has been called for delivery. I.e., we're talking about over 90%
yeah,
of what was open has been called for delivery in February. We've still got 4 million ounces left. That's probably going to be called for delivery. So we're going to see in the month of February probably something like 98% of the open contracts called for delivery.
yeah. And
And he-
Clive, the other thing that could happen, you could see people come in and start opening positions further in the February contract, so that open interest could even go higher, and they could ask for more delivery.
and exactly, you've hit the nail on the head there, Mario, because if you look here at the March open interest, it's gone down from 508 million ounces to 429 million ounces. So what's happening is people are saying, and I'm going to tell you why in a minute, they don't trust that they're going to get delivery in March. So what are they doing? They're rolling their contract forward or backwards, depending which way you look at it, rolling it backwards actually, into January and February to take delivery in the earlier months, just in case they can't get it in March. And I'm going to show you why in a second they may not get it in March. But let's concentrate on March for a second. We see that March 24, there was 27 million ounces called for delivery. March 25, 80 million. That's 3 times as much were called for delivery in March 25. We don't know what's going to be called for delivery in March 26, but potentially, if all of those 429 million ounces were called for delivery, we'd be going from 27 to 80 to 429 million ounces. I'm not expecting all of that to be called for delivery, by the way, but don't forget that in February, 90 to 98% of the contracts are being called for delivery. So, but even if 25% of that is called for delivery, that's a very unstressed situation. We're talking about more than 100 million ounces called for delivery. And what I want to look at now
And I think
is,
that's how much they have right now in registered category, 100 million.
yep, well, there we are. I'm going to show you. Here's the line for registered.
Yeah,
In October, there was 167 million ounces. By
yeah.
early January, 123. Mid-January, 114. Now, only 103 million ounces. The registered silver available for delivery is dropping very, very sharply. Now,
Mm.
don't forget, there's 429 million ounces, which could be called for delivery in March. Even if 25% of that, very low, a very, very low number is called for delivery. That's 100 million ounces, of which there's only 100 million ounces available for delivery anyway. And that number, that 100 million, is dropping day by day by day. So by the time we get to the 27th of February, when March arrives, we could well be in the registered category down to 87, 88 million ounces in registered against calls for delivery, even in a very conservative market of 100 million plus.
Yeah.
But I don't think it's going to be. I don't think it's going to be 25% of the March contract called for delivery. I think it's going to be more like 75% of
I,
this.
I agree. And Clive, the other thing that people need to realize, and I was a futures and options broker for like 20 years, is that for silver, the January and February contracts, they're not the they're not like on the run, they're not like a front month. And despite that, people still want to take delivery in those months, which shows that they want the silver now. And March, though, that's the front month right now, and you usually see a lot more deliveries in the front month. So, yeah, this is very interesting, and I noticed as well in China. In the exchanges there, the futures and the gold exchange, also the vault amounts are dropping quite rapidly, and yeah. So the other thing, so yeah, Clive, we could be in for COMEX can't go. They can't default because they've got rules where they could declare force majeure and cash settle, right?
Yep.
But from what we're seeing, people don't want cash settled. They want the physical. So what do you think is going to happen to the silver contract on COMEX?
Well, look, is when we looked at those numbers, silver is clearly being drained, not only from the registered category, but also from the eligible category. But if we both categories were going down, the eligible category went down from. Let's just give that figure again. So the registered went down from 167 in October millions to 103 by now. The eligible went down from 329 to 294. So both categories are being drained. The
Yeah,
silver is leaving COMEX. We don't know where it's going, but the fact is, they're just. It looks like there won't be enough to meet future deliveries if this trend continues.
eligible as well is not really readily available, isn't it? It's
No,
like
it's
whether that's somewhere else in the world or
yeah,
it's
eligible.
encumbered as well, right? Isn't it?
What eligible means, it's the right size bars, but it's owned by somebody, such as an exchange traded fund, a foreign government, a family office, or somebody else who hasn't yet arranged for moving it out of COMEX. I mean, COMEX is a very cheap and convenient place to store your gold. You can buy your gold on COMEX, and you could choose to leave it there, but putting it into the eligible category, but because you're not planning to sell it, of course, some of it will have a price, but some of it will never be sold. It's held by ETFs. They can't sell gold, can't help sell silver unless the underlying investors want to cash in.
Yeah. So hi ho silver.
Hi
You like
ho.
this? Yeah, it's one of the mugs that Karen, who runs the merchandise store, she designed it. And if you're interested in one, there's a link to the merchandise store in the description. And I think she's been designing other mugs. And there's other stuff as well. It's the Rudy merchandise store. Have a sip of my coffee. Mm.
Well, Mario, all I can say, when you designed it, hi ho silver was the right word, but perhaps given what's going on, it should be high low silver.
Yeah, right now, yeah, high, low, yeah. But I still think we're going a lot higher, and what we've seen now is just a shakeout of the very speculative players, maybe a little bit of manipulation by the big shorts. But I actually think the uh, the JP Morgan and the banks, they can see, I think, that the US. I saw a headline that they want to work with Mexico on cooperating with minerals, and the biggest export for Mexico in minerals is silver. They didn't say silver, and also JD Vance, the vice president, said that they're going to put a floor on critical mineral prices. So
Hmm?
yeah, he said that a couple of days ago. So they don't want they want the price to be stable and even higher maybe. Clive, I told you before I started that I saw I'm going to share this as well with you and the viewers, and I have to thank actually Vince Lancy, VBL on X for this because he noticed this. And so, what is this here? Well, this is the gold options on COMEX, and this is the December 2026. So it expires probably sometime in November this year. And if you scroll down here, and this is the open interest. If you scroll down, oh, these are puts now. So there you go. The 15,000 calls, Clive. The open interest is over 8,300, which is huge. That's, you multiply that by 100 ounces. And I think yesterday that call traded for $15. So it's like over almost $15 million someone's willing to pay for a 15,000 call. And also the 20,000 call, the open interest is almost as much. And I think it traded yesterday for almost $10. So you do 10 times 7,800 times 100, which is 100 ounces per contract. And someone is spending roughly almost $8 million buying these calls.
Are they, you say $15,000 call? Is that $150? Or how does that work? Why is
No,
it
no, it's a
15,000?
strike. It's a strike price of gold at
Oh,
15,000.
it's on gold. Okay.
Yeah, yeah.
I thought silver. Yeah, okay, that was
No,
possible.
yeah, this is gold.
So,
So
someone thinks we could get to $15,000 by, what's that maturity?
sometime in November. Yeah, the third. It's the
Yeah.
third. Yeah, but the other thing as well, Clive, someone expects a sharp move higher, because let's say we move from like around 5,000 where we're now to like 6.5 in a matter of weeks, you could see these prices really jump. Even the 15 and 20,000 calls. So they want exposure to what the options traders call gamma, where the price moves even though it's not near the money. If it moves sharply higher, gold, and there's still a lot of time, these options could double in value and they just get out. But it's a risky thing, of course, because if
I would have.
gold doesn't do anything very sharply, they will become worthless. But like you said, maybe someone does expect something to happen, some kind of revaluation like we've spoken about.
I would have thought these options were fairly cheap to buy. I don't know what it would cost to buy
Well,
an
let's have a
option which is
look.
so
We got the
so far out of the
quotes.
money.
We got the quotes here. We got the right month. This is March. Let's change it to deck. Uh, and
You got
we
the
need
strike price in the
all of
middle.
them, all of them.
Yeah,
Yeah, I noticed, I think yesterday they traded at 9.5 to 20. Let's see, where are we here? Strike price. Yeah, they've got, oh, just gotta scroll. Come on. Well, here we go. So the 15,000, here they are. They
15
settled
months.
at 15,
Yeah,
and the 20,000 settled at 10.
so a
So
thousand of those options would cost you 15,000, and you saw what do we see 8 or 9,000 or
no,
15,000
no,
we got.
it's not 15,000 a thousand. It's 15 times 1,000 options times 100
Oh
because
yes,
each
yeah,
option has
that's right.
100 ounces.
So that'd be for one option, it would be 1,500.
Yeah.
Yeah, I can't tell you what the maths is, but that's a lot of money.
Yeah, yeah, yeah. So there you go. Yeah, what there could be betting on is that volatility will go through the roof. Let's say we move from 5 to 7 in a couple of weeks and we see another sharp move higher. These could become worth like 20 and this could be worth 30 and then they'll just get out and double their money. But I think it's quite interesting that they're buying such out of the money stuff. And talking about what do you think about revaluation, Clive? Because I wanted to play this here. Let's see if I can find it. Oh yeah, the Secretary of the Treasury, Besant, yesterday. I think he, I think it was yesterday. He was testifying in Congress. Could have been yet the day before, but it doesn't really matter. And this is what he said. Be perhaps gold-based, other than they are. It may be Chinese digital assets that may be backed by something other than the RMB, perhaps gold-based. Uh, we Did you see? This is Judy Shelton here.
Yes, I did know. Okay.
Yeah, because the lady here asked her, what's her name? She asked her. Let's see this.
Sure, there are financial leaders to American financial leadership
Here.
to build an alternative to digital assets and block digital. Trying to
Let's start from the beginning.
Is China trying to use digital assets and blockchain to build an alternative to American financial leadership?
We don't know that for sure. There are lots of rumors of Chinese digital assets that may be backed by something other than the RMB, perhaps gold-based.
Did you see Judy Shelton? She nodded when he said
Yeah, I
gold-based.
saw that. Yeah, she's smiling as well.
Yeah, and the thing is, Clive, where is it? I interviewed her in November. I'll bring it
Hmm.
up. And we talked about, I asked her, hold on. Share. Here we go. So yeah, you can see I interviewed her in November. Didn't get that many views, but the plan to link dollar to gold again on July 4th. That's her plan, right? The gold backed bonds. But I said to her at the time, um, the Chinese and BRICS, they're buying a lot of gold. And she said, yes, I know. And I told her, revaluation would be a good thing because the US would get a windfall. They could pay off some of the debt, and that would help bring down yields. And she said, oh, that's an interesting idea. I'm not saying she's told Besson to do that, but I don't know. It looks very interesting that they're actually mentioning gold there.
Yeah, I mean, a revaluation of gold, I think, is something which cannot be avoided by the United States, and they will not have, they will do it because it's another way of reducing the debt. The very simple mechanism of doing that would be a sale and repurchase agreement with the Federal Reserve. They would force the Federal Reserve into that, which means the Treasury gets to keep its gold, but effectively forces the Treasury to buy that gold and sell it back to them. But basically, they're paying the Federal Reserve with what's called gold notes, which are not part of the national debt. They are perpetual and they have no interest on them. So
Yeah.
effectively, they end up getting some fresh money that they can spend to reduce the debt in exchange for giving the Federal Reserve something which can never be redeemed and has no interest
Yeah,
and is not part of the debt.
yeah, they just revalued the gold certificates that the Fed has that you said are perpetual and not redeemable to, let's say, $5,000. And then the Fed, that's the Fed's asset, and then they sent the cash to the general treasury account, which is a liability, and for the Fed, and the treasury will have like 1.2 trillion to play with without increasing the debt. But Clive, I don't know if you've seen this, and this is about the U.S. gold in Fort Knox. But apparently, well, this is in from the Epstein files. It says here that Russia says IMF chief jailed for discovering all U.S. gold is gone. And granted, this is from 2011. Do you remember Dominique Strauss-Kahn? He was jailed in the U.S. There's a scandal, and he lost his job. And apparently,
Oh, yeah.
this ex Epstein file is saying that he discovered that there was no gold in Fort Knox. I
Well,
personally think there is gold in Fort Knox, and if there wasn't, then they've had enough time to replenish it.
yeah, so that's probably the underlying reason why they wanted him in jail. But I think the official crime is he forgot to leave a large tip for the chambermaid, if you know
Yeah,
what I mean.
yeah. Chambermaid. Yeah, I know.
She came back to get her tip and there wasn't one.
Yeah,
And then all hell broke loose.
yeah. It's weird. That was a weird incident at the time, wasn't it? What else is going on? Well, Clive. Let's see here. Oh, the other thing I saw is that the open interest, let's see, for gold is the lowest it's been for 2 years. The gold futures on COMEX. And I guess that could mean a couple of things. I want to see your opinion on it. One is that there's still a lot of room for speculative longs of gold to get in. So there's still a lot of room on the upside. Or the other one is that the smart money, the big money, family offices, central banks, they're now avoiding COMEX because COMEX is mainly a place where you trade for fiat profits, right? So maybe that's what it is. COMEX, people are not really, they're going for the physical. They're buying elsewhere. What do you think?
Yeah, I think it's clear that everywhere in the world, taking physical delivery into your possession where you can lay your hands on it is a far more sensible strategy than leaving it in the hands of a third party where you have to ask permission to get it. Let's just say, I think there are now calls going out for Germany to repatriate the rest of its gold. We'll see how long that takes them to get it out of the United States.
Yeah, yeah, I think they still got about 1,200 tons at the New York Fed. And I would definitely not, if I was Germany, I'd be worried about having my gold there.
I mean, I think it's a trend around the world. People are saying, I'd rather have it where it's in my control than in the control of a third party who has to give me permission to get it.
Yeah. So you told me there's something you wanted to talk about as well, Clive. I forgot now.
No, I think the thing I wanted to talk about was this crunch coming in March on
Oh
silver.
yeah, the crunch in March. Yeah, yeah, yeah.
I mean, the other thing to say, which may have gone under the radar screen for many people, is we're having a bit of a sell-off in Nasdaq at the moment,
Oh yeah.
particularly the mega caps. There's been this story doing the rounds about the incestuous behavior of various technology companies, and whilst people sort of see this as kind of incestuous, I don't think a lot of people have expressed correctly the true problem here, and I can say it in a few words to make it simple for everybody. When you engage in vendor financing, which means you pay somebody money, you loan it to them, or you invest in their shares, or you have some sort of arrangement with them where you give them the money so they can buy your product. It's not illegal, but what that does, it creates immediate sales and profits, which is very good for the shareholders, particularly the insiders, the company management who want to offload their shares on the market. So it increases sales and earnings, improving the share price. But it does that at the expense of the company taking on future risk. Because the company to whom you've given the money or invested in their shares, there is no guarantee that they will make a profit in the future, and therefore there's no guarantee that they're going to be able to repay you or that the shares you bought will actually be worth something in the future. So these companies which are engaging in this vendor financing are pretty much swapping future risk or taking on future risk to boost current profits. And that is a formula which may or may not go wrong, but what it is doing is allowing an opportunity for the insiders, the ones who work for these large companies, to offload their shares at a higher share price than they would have otherwise had if those sales had never existed.
Yeah. Do you follow that? I think this is the Roundhill Magnificent 7 ETF. So it definitely looks like it's still relatively high. I mean,
Well, if you look at
compared,
the very last day, if you look at the yesterday, let's
yeah,
expand that, you can see it's had a bit of a bad day yesterday,
yeah,
breaking down below lots of
yeah.
recent support levels.
Yeah, yeah. And oh, the other thing I wanted to talk about is Bitcoin because that, we usually don't cover Bitcoin, but I think it could be having an impact on everything because it's grown so much, Bitcoin, and I think overnight we traded down to 60,000. It's rebounded now, but it's I even drew it here and I had an arrow that was going down actually. I didn't realize
Mm.
that. It's from a while ago. Well, it dropped here, actually rebounded, but now it's do you think that's having an impact on the tech sector as well and overall liquidity? Because so many people have started investing in Bitcoin. And maybe, Clive, not, a lot of these people, I'm sure they haven't bought like a hard wallet and they keeping it safe. They've done it through funds, ETFs, through BlackRock. So, do you think that could impact counterparty risk as well in liquidity?
Yes, I mean, I think if we look at what's going on at the moment, gold, silver falling, stocks falling, Bitcoin falling. People are rushing for cash at the moment, but they're going to be in cash, and then they're going to start thinking about this in a few weeks and say, "What am I doing in a depreciating asset?" Then they're going to go back into something else.
Yeah.
So the guessing game, Mario, is when people return out of cash into something else, where will they go? I'm betting it will be the commodities sector.
Yeah, my ounces of gold and silver are on gold and silver and commodities, hard assets. I mean, even Ray Dalio, did you see? He thinks the current monetary, well, he called it a monetary system, but John Exter, who was like a gold bug and New York Fed member back in the 70s, he wrote about the fiat dollar being I owe you nothings. And he said we had a system, it was the Bretton Woods system, and then we abandoned it. So we have a non-system. But anyway, Ray Dalio thinks this system is on its last legs. And he thinks gold and I think silver is going to come back as well.
We're at 5 minutes to midnight when it comes to the world's financial system, at least the post 71 financial system. I don't think that it's possible for government debts to continue to escalate at the rate they're going without something going terribly wrong.
Yeah, and unless, maybe, unless they revalue gold, the US, and then that will cushion their debt load. But you can't keep doing that, or else, what the underlying Clive reason for the problems is too much government spending, I think, and too much money printing.
Yeah, it's at the end of the day, as the government borrows money, it gets poorer, and someone somewhere gets that money, and they're going to put that money they get into some sort of asset. They're not going to leave it sitting in cash forever. They might leave it for a month or two while they try
Yeah.
and second guess where the market's going. But at some point, they're going to say, "I'm not going to stay in a depreciating asset for the next 30 years because it will buy me nothing." So they're
Yeah.
going to move into property or equities or Bitcoin or gold or silver or whatever takes their fancy at the time.
I
Might be
listen.
collectibles.
Yeah, I listened briefly to President Trump was interviewed the other day about the economy and the debt, and he said what we want to do is grow the economy uh, enough to make the debt smaller. But and yes, U.S. GDP is like 4%, but a lot of that is to do with AI, isn't it? I mean, AI is contributing to massively to GDP. I think we saw some employment numbers yesterday that were really weak in the U.S. And today they're not publishing the non-farm payroll. Their excuse is that the government was shut for a while and they couldn't compile the data. But maybe it's a really bad number and they decided to give that excuse. But do you think they'll be able to grow out of the debt like President Trump and maybe Besant think they can?
Well, there's a plausible story that we will move into a world where effectively all businesses are run by artificial intelligence, and we can all sit at home watching Netflix with a universal basic income. Meanwhile, the economy continues to grow due to these intelligent machines. It's a wonderful world to look forward to, but it's going to come slowly, if it comes at all. But yes, I do sincerely believe that we're in a situation where artificial intelligence, we've got two things going on. One, we've got the money changing hands in the AI sector, and we're talking about mega amounts of money changing hands from one company to the other, creating sales and profits left, right, and center. And that's the incestuous behavior I was talking about earlier. So that is boosting GDP on the one hand, and then the other aspect, of course, is we've got the ongoing benefits of companies becoming more and more efficient. That'll be a very slow process, but over time, some employees in most companies will become faster workers or more efficient than they were before, and that's got to, at the end of the day, boost output.
Yeah, and they'll be able to do more, and they'll have more time to do other things as well if a certain task doesn't take as long because AI helps. So anyway, Clive, any interesting videos on your channel that you want to tell the viewers about?
I'm working on an. It's not out yet, but it'll be out within 2 weeks, so people can keep tuned to that. I'm working on an educational series for children, where children will, through a children's story idea with lots of children's pictures, will learn about words like inflation. What is a loan? What is to borrow? What is to lend? What's interest? What does it mean to get? What's the word getting fired is? What is a landlord? What is rent?
Oh,
What is a tenant? So keywords for children who are not learning these words in school. It's going to be targeted at kind of 8, 9 year olds, but it'll be great fun for the adults because I'll be bringing in the names of some important people like Mr. Elephant Tusk, who runs the car factory, or Geronimo Powell. Geronimo Prowl, the owl, who runs the meddlesome reserve bank
okay.
in Toy Town. So there'll be a little bit of fun for the adults too.
Okay, great. And from me, I'd like to wish everyone a great weekend, and we'll talk later. Bye.
Thanks. Bye bye, Mario. Bye bye,
Bye,
everybody.
Clive.